Filing taxes in the United States can be a complex process, especially with the numerous deductions, credits, and changing tax laws. A single mistake on your tax return can lead to delays, penalties, and even audits. As tax season approaches, it's crucial to understand common errors that many people make and how to avoid them. This video highlights the top 10 mistakes to avoid when filing taxes in the U.S., ensuring that you file accurately, on time, and with minimal stress. 1. Filing with incorrect personal information. The most basic, yet most common, tax filing mistake is submitting inaccurate personal information. This can include misspelled names, incorrect social security numbers, or wrong addresses. When the IRS receives your tax return, they match the information against their records. If any personal information doesn't align, your return could be delayed, or you may not receive your refund. Double-check all personal details, including your name, SSN, and address, to ensure everything is accurate before submitting your return. 2. Failing to report all sources of income. One of the most important things to remember when filing taxes is to report all sources of income. Many taxpayers miss or underreport income from side jobs, freelance work, or gig economy earnings. Inaccurately reporting income can result in penalties and interest charges from the IRS. Always make sure to include all income sources, including wages, interest, dividends, rental income, and any freelance or contract work. If you receive multiple forms like W-2s or 1099s, keep track of all of them to avoid missing any income. 3. Overlooking tax deductions and credits. There are numerous tax deductions and credits available to taxpayers, such as the child tax credit, earned income tax credit, and deductions for student loan interest or medical expenses. Failing to claim these benefits can result in paying more taxes than necessary. On the other hand, it's also essential not to overstate deductions or credits, as this could raise red flags for an audit. Ensure you are aware of all the tax breaks you are eligible for and consult IRS guidelines or a tax professional to avoid leaving money on the table. 4. Choosing the wrong filing status. Choosing the correct filing status is vital for your tax return, as it affects the tax rate you pay, your eligibility for credits and deductions, and the standard deduction amount. The IRS offers 5 filing statuses: single, married filing jointly, married filing separately, head of household, and qualifying widow, Each status comes with different rules and benefits, so selecting the right one is crucial. For example, if you're married, you can choose between married filing jointly or married filing separately, but each option impacts your taxes differently. Be sure to choose the status that best reflects your situation. 5. Ignoring state and local taxes. Many people focus solely on their federal taxes and forget about state and local tax requirements. However, each state has its own tax laws, and some local governments levy additional taxes. Depending on where you live, you may need to file a state tax return, local income tax return, or pay additional sales or property taxes. Be sure to understand your state and local tax obligations and file the necessary paperwork to avoid fines or penalties. 6. Missing the filing deadline. Missing the tax filing deadline is a mistake that can have serious consequences. If you fail to file your taxes by the deadline, you may face penalties and interest on any unpaid taxes. While the IRS does offer extensions, it's important to remember that an extension only gives you more time to file your paperwork, not to pay your taxes. If you owe money, you'll still need to pay by the original due date to avoid penalties. Always file your taxes on time, or apply for an extension if necessary. 7. Incorrectly claiming dependents. Claiming dependents on your tax return can lead to significant tax benefits, but it's crucial to do it correctly. The IRS has specific rules regarding who can be claimed as a dependent, such as children, relatives, or other household members. Claiming a dependent who doesn't meet the criteria could trigger an audit or result in disallowed deductions. Additionally, if another person, like an ex-spouse, claims a dependent you believe you're entitled to claim, it could lead to a dispute. Ensure that the dependents you claim meet IRS requirements and that you have the proper documentation to back it up. 8. Filing without proper documentation. One of the biggest mistakes taxpayers make is filing their tax returns without the necessary supporting documentation. This includes receipts, W-2s, 1099s, and records of deductible expenses. If you're audited, the IRS will ask for proof of the claims you made on your tax return. Failing to provide documentation could result in disallowed deductions or penalties. Always gather all necessary records before filing your return and keep them in an organized manner for future reference. 9. Using outdated tax forms or software. Tax laws change from year to year, and so do the forms and software needed to file your taxes. Using outdated tax forms or software can lead to errors, missed deductions, or even filing a return that the IRS doesn't accept. Make sure to use the most current versions of tax forms, whether you're filing online or using paper forms. If you're using tax software, ensure that it's up to date with the latest tax laws to avoid any mistakes. 10. Not seeking professional help when needed. Tax filing can be complicated, and sometimes it's easy to miss things. If you're unsure about your tax situation, it's a good idea to consult with a tax professional. While tax preparation services come with a cost, they can help ensure that your tax return is filed correctly, maximize deductions and credits, and avoid common mistakes. Tax professionals can also provide valuable advice if your financial situation has changed, such as buying a home, starting a business, or experiencing major life events like marriage or divorce. Filing taxes in the U.S. doesn't have to be a stressful experience if you avoid common mistakes. By ensuring that your personal information is accurate, reporting all income, taking advantage of available deductions and credits, and following the correct filing status and deadlines, you can file with confidence. Additionally, staying organized and keeping proper documentation will help prevent issues in the future. If you're ever in doubt, seeking professional advice can give you peace of mind and ensure that your taxes are filed correctly, saving you both time and money.